Hi guys. Today I found another posting on Reddit under personal finance. This time with the username Emery137. Actually, not as satisfied with the things that I guess about to talk about. Only because I I'm normally would recommend one thing, but it seems like that's actually not a viable option. But hopefully, what I'm about to say will help. And I'll talk a little bit more about that in a little bit. So basically, the user writes that I want to be able to pay off my credit card debt and have a I want to be able to pay off my credit card and will have a major expenditure coming down the pipe. What are my options? It seems like there's actually a few major expenditures coming down the pipe. Um, Basically, the user and the partner was able to slash some spending, and now they're net positive in their cash flow, which is great. Have a delinquency in the mortgage because it was not able to make full complete payments and was given poor advice. Bring home 4,000 a month in a higher education field, and all expenses, including food, utilities, bills, and all of that, is about $3,500 per month. This allows me an extra $500 per month. My FICO credit score is about 630 per Experian. Delinquencies, credit utilization, and student loans are killing me. Unfortunately, my partner and I are looking for for a few big expenditures in the next few months. A cross-country visit to see the partner's dying father, a plumbing issue at home that insurance is not covering, and a refrigerator and stove replacement. Thankfully, not a food safety issue yet, but I guess they're expecting that soon. And the partner is a freelance creator, but it sounds like his current project is not getting paid, and it sounds like it's going to be taken to court for the non-payment of invoices. And I guess it could take a while. They have mortgage and about $12,000 in credit card debt. Is what I've read so far. And what I guess the user would like to know is that if they should do a balance transfer and try to get to 0% on the credit card, but would pay about 3 to 5% upfront, or get a personal loan, expecting the interest rate to be somewhere around 10%, or keep paying things down and use a credit card for the emergency as like for the expenditure that's coming up soon, whether it's plumbing or traveling or the refrigerator and that sort of things. Currently, they are able to manage and have the ability to pay down a little bit more extra because of that $500 per month extra, but I guess it's not really fast enough for their liking just because of all the things that are coming down the pipeline. And the last thing they added at the end is that due to the physical limitations and location, a second job is not an option. And that's what the user writes. And of course, my natural first inclination is to get a second job, and I guess this is where the difficulty comes in. Is that because right now, I guess bring home after the taxes and all of that is about 4,000, giving you extra $500 per month, which is great. Having that extra 500 is great. It's just that for their likings, and because they know there's big expenditures coming down, like it's coming down no matter what. And the issue here, or the one unknown, is that how soon, how fast it will come down. And so in preparation of that, if their goal is to try to manage it a little bit better, again, I think really by just working on just a little bit more, having a second job, or doing something like again, a freelancer for a short period of time would be ideal. But I understand, I guess there are some, again, physical, geographical, limitations where it's just not a viable option, then you know, uh, yeah, I just don't know, you know. Of course, saving the debt or paying off the debt and saving as much money as you can definitely helps. It just sounds like the timeline is just not um, a feasible or viable thing. Having said that, you know, the three things that you kind of suggested, or at least the first two things that you suggested, definitely check it out, look into it to see. Keep in mind that if you're paying 5% upfront to get the 0% financing for, let's say, 12 months, that turns into more like almost 9% if you amortize it but over that 12 months. So but still is a lot better than I'm guessing paying whatever I think it was, like 29%, 16% that you're currently paying, and I guess anticipated 26% that you would pay otherwise. And so you know look into it, but I just don't know if it's if it turns in at some point, if it turns into just doing it just for sake of doing it, because it's 0%, is actually not. And a lot of people are, well, it's only 3% or 5%. It's true, but you do pay that off front, so which makes it a little bit harder, because again, when it's amortized over the time or the period, it is like an equivalent of like 9% or more, when you actually do the math. And the other thing is that getting a personal loan also, of course, definitely look into it. The only caveat on all those both of those options or is that your credit score. I think you mentioned that your credit score is in somewhere in the 600, 630, which makes it very difficult to get an approval. Now, once you get an approval, and you can do the math to see if this makes sense for you, because again, a lot of times the interest rate is one thing, but the cash flow is another, right? Like right now, what's really important is, one, you gotta have a little bit of extra money in the account. Like you gotta have a little bit of emergency fund. I think you said you spend it all, so you gotta have a little bit of that. Of course, ideally down the road, you want to have somewhere between 3 to 6 months. But for now, just having a little bit of just in case, like, hey, I gotta be able to, maybe 1,000 or two or something like that, just a little bit. But also to have a separate account where you're saving for that trip that's inevitably coming up, saving for that, I guess, a refrigerator and or the plumbing, which I don't know how much they will cost, but those needs to be saved as fast as you can, um, because that those things are coming up, like that has to be done. So try to save a little bit of that, and also the paying down the credit cards again. Those two things that you were wanting to do, definitely look into it. I just don't know if you'll be able to get it just because of the credit score where it is, and at some point, even if they approve it, if the payment on those are too high, again, I just don't know if is it worth it for you to take care of that, just because again, right now what's important is the cash flow. I think you got to have a little bit more than just $500 per month extra, because again, if you're tackling on more debt, rather than you save and paying down the debt, you be going further into debt, right? Because again, those things are inevitably coming up, and you would have to get into your the line of credit or the emergency fund, whatever it is, in whatever the means of getting it. And if you don't have sufficient cash for it, that means you're going to be increasing your debt again, meaning you're going to be increasing your expenses again. So that's where we got to be able to reduce the expenses as much as you can, the debt as much as you can, rather than focusing so much on how much of that payment is going towards the principal versus the interest. Because you could get, let's say hypothetically, you could get 1%, 2% interest, but if your payment is $700 per month, I just don't know if it's, and then you could be able to pay it off in, let's say, 2 years. I still don't know if that's a right move to make currently. Yeah, I don't know if that makes sense. And then the third thing you kind of suggested, which is the paying down the debt a little bit more, as fast as you can, and using that credit card to put the expenditures coming up soon. Based on the limit that you kind of mentioned about with the credit card limits and things like that, I just don't know if you're able to put all of that into that to cover all the expenditures that are coming up. Obviously, but your theory behind paying down the debt as much as you can and putting on that credit card if you needed to, absolutely. I mean, what else can you do? Like, right, when you don't have extra cash and you got to put it on the credit, that's what you can do and what you need to do. So definitely check those out. The other things that I would say to do is that obviously I just don't know if it's a viable option for you, but one of the things you could do is that again you could talk to your mortgage company and see, but is that typically, and again I said typically, I just don't know, but I think when you have a delinquency in mortgage, I think you have to wait a little bit until you show your payment history is actually better. And again, I say I use the word typically very lightly, but I think once you have maybe 6 to 12 months, I guess more closer to 12 months, when you have a 12-month payment history that's pretty solid, when you're not late on your mortgage for at least 12 months or so, I think you can get into a refinancing, do a cash out, what they call cash out refinancing on your home when you have a little bit of equity in the house. That's really helpful just because when you were able to take some equity out, I'm sure you'll be able to kind of take out enough to, again, depends on how much equity there is and what the new payment's going to look like. But you'll be able to kind of pay off the debt and set aside a little extra cash as well. Again, I'm not sure if there's something you can do just because you said you just had a mortgage late recently. And I know right now the interest rates are so high and your payment's going to go up and things like that. But it is better than paying so much higher, in my opinion, on the interest on these credit cards and having such a high expenses going out. This way, you can kind of reshuffle the deck and pay off the debt and have a lot better cash flow and be able to kind of set aside a lot extra money for the expenditures that are coming up. And you'll be able to kind of increase your cash flow from $500 per month up to a lot more than that. And then obviously you have other means to kind of tackle that all the way around. Lastly, you have about 3 different credit cards. You mentioned about the credit card limits, the balances, and the interest rates and all of that. One of the interesting that I actually found during the preparation of this video is that Experian actually has a credit card payoff calculator, so you can use, which will actually definitely help you. You only need a couple of information on there, which is like the balance on the credit card, the interest rate, and your monthly payments, and they will tell you a few things. But one thing that I really like the most is the number of payments. And the reason I say that is because, in my opinion, the biggest thing when it comes to paying down the debt is because I personally like cash flow more than anything else. So when you figure out which one of these 3 cards has debt that has a shortest repayment period, I would actually focus on paying that one off first, just so you can actually free it up. Now, the benefit of paying down the credit card debt is that as your balance goes down, your monthly minimum payment actually tend to go down as well, which will in turn increase your cash flow, right? But once you figure that out, which one of these debts that has that, and typically the credit cards with the lowest balance, I think, is the one that kind of allows you to pay up the debt fastest, just because again it's the lowest balance, and when you have an extra $500, you can use that to kind of pay it down. In this particular case, you already have a credit card with 0 balance. I think you have about 5 payments left on it, 4 or 5 payments left on it. So that might be another thing. You can just plug it in and see, different scenarios, run through different scenarios to see, okay, which way is the best way to use that extra $500 per month that you had to paying down the debt faster. But which again, I would do that after having a little bit of extra emergency fund, just in case. Not to say that they're gonna, like, cut out of your credit cards, or not to say that the creditors won't lock out your credit cards and stuff like that. But again, just to have a little bit of peace of mind, have a little bit of cushion, just in case whatever unforeseen thing happens. Having that extra cash definitely means a lot more, because although we like to think that income is pretty much guaranteed, and this and that, it's just we never know. And so having that extra cash to pay for at least food, utilities, and all that stuff, I think you gotta have that at least, just so if something happens, something were to happen, you can actually be in a survival mode, and be able to use that, rather than trying to use the credit cards and stuff like that. So emergency fund first, pay up the debt, look up to see which one has the shortest number of payments left on those credit cards, and I'll probably say focus on that and paying that off, and then focus on the other one, and be careful about the 0%, thinking, oh, it's only 3% or 5%, and that is a 0%. It's the easy way of thinking it that way, but it's, again, like I said, even if you're able to pay it off in 12 months, that 5% up front turns into like 9 months. I'm sorry, 9%. So hope this helps. Like I said, I would ideally would say, hey, do whatever you can to increase your income. That's the first and foremost. But I understand, I guess there's some physical and geographical location, limitations, and so hopefully, again, this will help. And thank you for watching. Bye.